And good morning, good evening, good afternoon. This is FXPassion. This is the recorded webinar for Monday, Tuesday, Wednesday, Thursday. It's Thursday, April the 18th, Melbourne, 9 p.m. Singapore, 7 p.m. Madrid, it's 1 p.m. London, England, it's noon, 90 minutes of course. New York, it's still early. New York, it's 7 a.m. and Toronto, Canada, 7 a.m. Welcome everybody. This is Forex Trading for Beginners. This is FXPassion, and we are learning how to trade the Fibonacci numbers. Trading the Fibonacci numbers, the ABCD swings. Our goal for you is to become consistently profitable, minimum 3 months, knowing when, how, and why you make and or lose money. You should not be allowed to trade with real money until you reach the goal. What is the goal? To become consistently profitable. If you are not going to listen to us, here is the risk disclaimer. Don't trade with money you cannot afford to lose, and the webinars are not investment advice. They are for educational purposes only. And for homeworks and or additional coaching or training or just questions, you have the Gmail contact, Skype contact, and the LinkedIn contact. So that being said, let's dive into the live markets. And let's continue to talk about the confirmation Fibonacci. So we are going to open USD JPY this time. USD JPY, there you go. And everybody, you should have the original Fibonacci on all time frames. You should have the contrarian Fibonacci on all time frames, and you should keep track of the Fibonacci of the confirmation on all time frames. Okay, if you want to trade according to the Fibonacci, you need to have them on the charts, right? So do your homework and try to identify the Fibonaccis. Okay, so what you see, forget the indicators. We're going to forget the indicators, they're not important at this point in time, so I'm going to delete all of them. Not important, not important, not important, not important. Delete, delete, delete. But I want to show you that I have all the Fibonaccis. Okay, so USD JPY monthly chart. Okay, so as you can see, I have my original Fibonacci and I have my confirmation Fibonacci. Right, so this is the original one, is in here, and I have the confirmation in here. This is the monthly chart. Now if you can see on the weekly chart, the same. I have the original Fibonacci. Okay, I'm showing you this because I don't want, oh, Passion is only talking, you know, but he does not have. Yes, I have. Okay, so, and there you go, this is the confirmation Fibonacci on the weekly. If you go on the daily, I have the original Fibonacci and I have the contrarian Fibonacci. So there you go. This is the original one, A, right, to B. Okay, I'm going to do it like this. So I have the original one, and on the right, this is the daily chart, USD JPY. On the right, I have the confirmation Fibonacci, the first and the second. We are in the second confirmation Fibonacci, and most likely the market is going to move up higher, right, to fulfill the extension. So as you can see, I have all the Fibonaccis on my monthly chart, weekly chart, daily chart. Not sure about the 4-hour chart. Yes, I do have. I need only to adjust them. So I have the original one, which is up. Let me see, profit, stop loss level. Okay, so This is the 4-hour chart. I have the original one and I have the contrarian. The original one, it's up, the contrarian, the market just broke the contrarian Fibonacci. So contrarian, and we're going to do an exercise on the 4-hour chart. Okay, let's go. So everybody open USD JPY 4-hour chart first. Okay, so if this is what you see, where are you going to start drawing your Fibonacci's? And of course we need to compress the chart first, right, to see on the larger scale what is happening. So what is happening, you go on the left, right. So what is happening on the 4-hour chart is that we were in an uptrend until here. The market was making higher highs, higher lows, and then we were in a downtrend, right? And then we have another downtrend line like this, and we have another downtrend line like this. Okay, now the question is, did the market broke our original Fibonacci? Okay, so we were in an uptrend, the market was making higher highs, higher lows, higher highs, higher lows, and then the market reversed, start making lower highs, lower lows, lower highs, lower lows. And then the market broke our aggressive downtrend line, and the market already broke our medium-term downtrend line. But still we are under the long-term downtrend line. Okay, so what should we do when this happens? Where should we start? Should we start drawing an up Fibonacci original one? Should we start drawing a down Fibonacci original one? And the right way to do it, everybody, is to start, even though the market broke our aggressive trend line and the medium term trend line, the right way to do it is to start in here. Okay, why is that? Because this is the starting point of the downtrend. This is the highest high, the absolute high. Okay, so on the 4-hour chart we're going to start in here, and of course we are going to use the technique. We're going to check if the market is going to break our A, right? So we don't need to waste the time. And okay, this is going to be our A first, original one. This is our A, and our B as soon as possible is down here. Fibonacci retracement tool, A to B, A to B is in here, and you can already see, everybody, that as soon as I'm going to move my A, B, C to D, the market broke, right? The market broke my A already. So we're going to jump on the right, and we're going to start in here. This is going to be the new starting point. A, this is going to be our A, and our B is the first low as soon as possible after the A, which is this one. This is the B, and Fibonacci retracement tool, A to B. Red goes to red, so Fibonacci retracement tool, this is a low and this is a high, and I'm going to move to the next A, B, C, D, A, B, C, D. Green goes to green, and this is the third swing, right? So A to B, B to C, A to B, B to C, A to B, B to C. And as you can see, again, if you move, if you check on the right, you see that in here the market broke already our down Fibonacci. So what we're going to do, again, we're going to start up in here on the next, remove and cancel everything, right? This is going to be our A, this is going to be our B, A to B, Fibonacci retracement tool, and I think now we are ready to go finally. So A goes to B, I mean to the C, right? So this is going to be the C. This is our C, so A goes to C, and the D must be a low, remember, our D is down here, so B goes to D, and B goes to the D, come on, there you go, and again we're going to adjust our original Fibonacci on the USD JPY pair for our chart. Now the next was, where is the C? This is the C, is the highest point inside the AB boundary after the B before the market hits the appropriate D extension. So in this example, red goes to red, and the red is, this is going to be the low of the red, so A, B, C, D. We're going to move A goes to C. This is our new A, and B goes to D. This is our new B, and let's adjust our original Fibonacci, right? Now finally the market is moving. This is our C, green goes to green. You learned this already, right? So this is the new swing, Fibonacci retracement tool, A, B, C, D, and again this is our new C, green goes to green again, so where is the first low? Is down in here, Fibonacci retracement tool, right? So this is the new swing, and again this is the C, green goes to green, and down here is the D, right? So this is our last Fibonacci, our last down Fibonacci. So this is our A, and this is our B. A, B, C, D, so we can move, right? See retracement and the appropriate D extension. So this is our A, come on, this is our A, and this is our B. Okay, so we were in a down sequence, down Fibonacci, A, B, C, D, 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 A, B, C, D. Okay, there you go. And as you can see, the market broke our down Fibonacci in here. See? The market break our A. So we're going to delete everything. Okay, delete everything. And we are going to perform an Fibonacci exercise starting from here. So we are going to reverse our Fibonacci, and this is the A. Okay, this is the A, and where is the B? The B is the first high as soon as possible after the A. So this is our B. Nothing difficult, right? Nothing special. And let's draw. So we have our first original Fibonacci, and this is what you see, everybody. So should you start drawing the contrarian Fibonacci, or should you start drawing the confirmation Fibonacci? What do you think? Should you start drawing the confirmation Fibonacci or the contrarian Fibonacci? And of course the answer is the confirmation Fibonacci. Why is that? Well, we are in an extension, right? So this was the retracement, okay, and starting from this point the market resumed the extension. So the market is extending to the extension, okay. So this is the reason why, if we missed, right, if we missed this entry, which was the C, we always say don't panic, we have another chance, a second chance to enter the trades is with the Fibonacci of the confirmation. So ABCD, where we are going to start to draw the Fibonacci of the confirmation. Well, the Fibonacci of the confirmation is we need to find the starting point of the extension, right? So where is the starting point of the extension? Well, maybe it's this one, or maybe it's this one, but this cannot be because the A must be a low, okay. The A as a starting point must be a low, okay. And yes, the C does not need, there is no need for the C to be a low or a high, okay, but the A, when you start the Fibonacci, must be a low, okay. And yes, of course, when the market is going to hit the D, we are going to move our A to the C, okay, but the confirmation Fibonacci needs a low or a high. So the starting point of the extension is this one. So sub A, sub A, and sub B, right? So sub B. What is the sub B? We are applying the same rules. So the first low and the first high, and this is our first Fibonacci of the confirmation. Okay, sub A, sub B, and we can trade this one, right? Where is the sub C? Sub C is the lowest point inside the sub A, sub B boundary before the market hits the appropriate D extension. And where is our sub D? Of course, green goes to green, so it's going to be sub D is going to be up here, right? So what I'm going to do, I'm going to move my sub A, and we can take some horizontal line to help ourselves, right? So just color code it differently, so let's make it violet and different stroke. Okay, so sub A goes to sub C, and sub B goes to sub D, right? Which is going to be higher the next leg. Fibonacci retracement tool, and we have a new confirmation Fibonacci. So we are here right now. And again, what we are going to, this is what we see so far, okay? So this is the trading exercise. We are moving our, again, our sub A to the sub C, and we are moving our sub B. No, we are not moving yet because we need the market to hit the green. So let's wait and see. Let's wait. The market is moving, and finally it hit our sub D. So this is going to be our sub D, and we are going to move our sub B to the sub D. So we have a new confirmation Fibonacci, new boundaries, and this is now very important, right? When this happens, everybody, it's extremely important for you that you are aware where is the original projected D level Okay, so if we are going to trade the original Fibonacci, our take profit level is not going to be up here. And let's color code this in red. So our take profit level is going to be the extension area of the original. Why is that? Because the contrarian Fibonacci and the Fibonacci of the confirmation are the structural part of the original one. Okay, the original one is the strongest, so this is going to be our take profit level. Okay, now let's see what is going to happen. So the market is, we can dive into the chart. So the market is moving and moving, right? And we have a counter trendline break. So remember, I'm going to put it on the chart. So green and like this and like this. So the green level, everybody, is our take profit. Now if I'm entering trading this counter trendline break, I cannot risk, right? I cannot, and this is my entry, the white candle. I cannot risk that much. I cannot put my stop loss below the sub A, because if I'm going to do this, I'm going to risk more that I'm going to make. And this is where traders lose pips, and this is where traders lose money. Okay, now what can we do? Of course, we can put our stop loss 10 to 15 pips below the sub C, right? But remember this, when you put your stop loss inside the AB boundary, we are increasing our chances for the market to hit our stop by 80%. So the best place to enter this trade is still, the best place for the stop loss is still below the sub A. Okay? But it's up to you, everybody. You can trade this one like this because risk management is in place. Passion, what would you do? I would stay out of this trade. Okay? My stop loss is always above or below the capital A of the original Fibonacci, or the sub A or sub B, whatever. Okay, so this is a trade I will not take in this example. Okay, so let's see how it's going to play. Some of you are going to take this trade. Okay, this is your risk, this is your reward, and let's color code in green. Green and green. There you go. So let's see. The market is moving, going up, right? Going up, sideways, bam. See? We just lost a trade. Okay? If you want to learn anything from this recorded webinar, everybody, write this down and put it in front of your computer, your monitor, whatever. When you put your stop loss inside the AB boundary, could be the original capital AB boundary. If you are trading the retracement, if you put your stop loss inside the sub A, sub B of the contrarian, or if you are trading extensions, if you put your stop loss inside the sub A or sub B boundary, you are increasing your chance for the market to stop you out 80%. Okay, write this down and remember this. Okay, now there is a thing we didn't talk about yet. So, and this is a new thing for you from this recorded webinar. Let's wait for the market. Now we have a low. We didn't talk yet about that we can draw a contrarian Fibonacci inside the Fibonacci of the confirmation. Right? We didn't talk about this yet. So if I can draw a contrarian Fibonacci, if I can put a contrarian Fibonacci into the original Fibonacci, why couldn't do this on the confirmation Fibonacci? So the answer is yes, we could, right? So what we're going to do, and this is a new thing, don't worry, what I'm going to do, I want to trade a confirmed sub C. Okay? And don't panic, the rules are the same, the logic is the same, okay? So why the market reversed and stopped me out? Because this sub C was not confirmed. Okay? So I want to enter buying a confirmed sub C. What I'm going to do? I'm going to draw a contrarian Fibonacci on my Fibonacci of the confirmation. There you go. I have the contrarian Fibonacci. Now what can I see? What can we see, everybody? I'm going to zoom in. What can I see? I can see that my sub C is not confirmed because the maximum, the extension of the contrarian Fibonacci of the not the original, of the Fibonacci of the confirmation is still inside the sub A and sub B boundary. Okay? Now I want to enter with the counter trendline break, so let's see what is going to happen. And of course, some of you are asking, Passion, can I trade the retracement of the Fibonacci of the confirmation? Yes, you can. Just bear in mind that this is a risky trade because you are going against the trend. Okay? Because when the market reversed, everybody, you need to pay attention, okay? Because this is where you can burn your account very easily, okay? This is where you can burn your account. If this is the original one, the Fibonacci on every time frame, okay? Could be 1 hour, 4 hour, 15 minutes, whatever. And come on, of course we have the retracement, right? So this is the Fibonacci of the contrarian Fibonacci, but then the market found it confirmed C and changed, right? Changed the bias, changed the direction from the retracement to extension of the original one. So this is the original one. And this is the Fibonacci of the confirmation. Okay, now you're asking, Passion, can we trade this retracement? Yes, you can, but these type of trades are extremely risky, everybody. Okay, why? Because they are small in nature. Okay, they are small in nature. Because you are, where is your risk? Well, the market already showed you that it changed from a retracement to the extension. So you are entering a risk in the risky area, entering a risky trade. Okay, of course, sometimes you can win, but most likely you are going to lose because we are in an extension. Okay, so you can trade this one, but bear in mind that you are going against the trend, not suitable for the beginner trader. And look at this, the market's making higher highs, higher lows, and you are entering against the trend. So can I trade this? Yes, you can, but I would suggest you not to do it. Okay, so let's get back to our original idea. So we want to enter at the sub C when the sub C is confirmed, right? So we're going to wait for the market is falling down, and finally we have the counter trendline break on this one. So this is our sub C, right? Now this sub C is not confirmed, but we can enter. Okay, why is that? Because if I'm entering here, counter trendline break, this is going to be my reward, and this is going to be my risk. Not the best one, right? It's not the best one. Risk reward is not the best one, but at least I'm not risking more than I'm making. And of course you can put your stop loss 10 pips below the sub C, but I'm telling you, if you put your stop loss inside the sub A and sub B, you are increasing your chances of being stopped out to 80%. So I'm going to enter this trade, I'm going to buy this market. My stop loss is going to be 10 pips below this sub A, and this red line is going to represent some of you that are going to put your stop loss 10 pips below this sub C. Okay, now let's see how this is going to play out. So the market is moving sideways, bam, see, the market stopped you out, and let's see if the market is going to stop me out again. Let's see, bam, and the market stopped us out. So we have a losing trade. Okay, don't get angry everybody, because when this happens, whose fault it is? Whose fault it is? It's my fault, right? Because I entered a non-confirmed C. Okay, our risk management was in place, but I had a 50-50 chance of this trade being a winner. So I lost? Yes, I lost. So I'm aware that I entered a 50-50 trade, so no problem. Okay, and of course don't risk too much. If you risk 1%, 2%, one losing trade means nothing to you. Okay, and this is one of the hundreds. Now in this example, our Fibonacci of the confirmation is not valid anymore. So what we're going to do, we're going to reverse, we're going to clean up the chart, right, clean up, and we're going to delete our original Fibonacci, not the original one but the confirmation, not valid anymore, delete everything, right, and what we're going to do, we're going to use our contrarian Fibonacci. Oh Passion, but you just said that we were in extension. Yes, we were, but the market break our confirmation Fibonacci. And when the market breaks our confirmation Fibonacci, this is a sign that the market is going to retrace into deeper levels of the original one. Everybody, all the pips, remember this, all the pips, all the money that is going to be made and lost, okay, all the money that is going to be made and lost is inside in here. Inside in here is the battle. All the money that is going to be made and lost in the future is inside in here. This is the battle. Okay, remember this. So what we're going to do, we have the contrarian, right? So let's write this down. This is going to be our sub A, and this is going to be our sub B. Where is our sub C? Sub C is the highest point inside the sub A and sub B boundary. Sub C after the sub B, before the market hits the appropriate extension. So, and there you go, we have our sub D is down in here. Okay, so let's move, let's adjust our contrarian Fibonacci. Sub A goes to sub C and our sub D, our sub B goes to sub D. Fibonacci retracement tool, there you go, and let's see what is going to happen. Bam, the market just broke our contrarian Fibonacci. Why is that? Because we are in the extension. Remember, I told you a few minutes before, don't trade retracements. Okay, this is why. Sometimes you are going to win, sometimes you are going to lose, but when you are going to analyze 1 month of trading, you are going to find out that the majority of the retracements were losing trades. Okay, so we are here right now. What we are going to do? Well, the market just broke our contrarian Fibonacci, so we're going to delete. What now? When we're going to draw what? When the contrarian Fibonacci is not valid anymore, this is a sign that a confirmation Fibonacci is in place. So let me see this high. 108,967. 108,972. 967, 972. So this is higher. So this here, this is our sub A, original Fibonacci of the confirmation, and this is up, is going to be our sub B, right? So now this is the Fibonacci of the confirmation. So we need to reverse sub A again. Okay, and text sub B, and this is the one I want to trade, right? Well, remember everybody, remember where is our projected the extension of the original one. You need to remember this stuff. There you go. So everybody, we are here right now. Look at the green line. Look where is the appropriate extension of the original Fibonacci. We are almost there, right? So I'm not going to trade this one, everybody, because maybe if the market is going to retrace, only if the market is going to retrace to the blue or the red in here, I'm going to enter this trade. Otherwise, up here, no way. Look at the reward and look at the risk. It doesn't make sense to me that I'm going to risk that much to earn that much, right? So let's see how it's going to play out. The market is moving sideways, 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 sideways. So, and bam, the market just hit the extension of the original Fibonacci, everybody, original Fibonacci. So this is a high, right? So this is the high up here. What I'm going to do, I'm going to clean up the chart, clean up the Fibonacci of the confirmation, clean up everything, clean up, clean up, and I'm going to move my B to the D. So this is the D extension of the original Fibonacci. Okay, see, and clean up this one, clean up, clean up, clean up. So we have our A, there you go, this is the B, clean up everything, right? And I'm going to keep track of the swing. A to B, B to C, C to D, right? And I'm going to move my A to the C. This is my A, and I'm going to move my B to the D. And I'm going to adjust my original Fibonacci. So this is the new AB boundary on the USD/JPY for our chart. Right, let me see what is happening. So we are here right now. So our D is up in here, our C is up in here. Let's compress the chart, right? So we are here right now. And what can you see, everybody, is that you can see the retracement is over, right? And the market is back up. This will be the counter trendline break. This will be the counter trendline break. And the market changed from the retracement to the extension. Okay? Now, where is our confirmation Fibonacci? Where is the starting point of the extension? And remember, your take profit is up in here. This is your take profit of the confirmation Fibonacci. So let's see, where is the starting point? This is the starting point, this is the first high. So let's see, let's go. This is going to be the sub A, right? Sub A, and our sub B is up in here. Where is the sub C? In this example, this sub C is sub C is the red, right? And red goes to red. Our sub D is up in here because there is no high, right? Sub D up in here. What we're going to do, we're going to move our sub A to the sub C, and our sub B is going to go up in here to the sub D. Sub C is in here. In this time, green goes to green, so our high is up in here, and this is going to be our new Fibonacci of the confirmation, right? Sub A, sub B in here, sub C, and we are here right now. So let's take a look at the overall picture, everybody. You need to study these charts and you need to study the Fibonacci, right? Now, we missed the trade. This was the entry, right? So, in conclusion, USD/JPY for our chart, stay out of the market. Okay, stay out. We're going to wait for the market to hit the appropriate extension of the original Fibonacci, which is up in here. and then we are going to adjust our original Fibonacci and wait for the next retracement and the next opportunity. Now, if the market for any reason retraces again inside this sub A and sub B boundary in some deeper level, then yes, this is going to be a new opportunity to enter, but in the meantime we need to stay out, because we are here right now, and if we are going to trade the original one or the confirmation, the Fibonacci of the confirmation, this is our risk. It doesn't make any sense to risk more that we are going to make. Okay everybody, see you back tomorrow for another recorded webinar on the confirmation Fibonacci. Until tomorrow, stay strong and trade with passion. This is FXPassion signing off.